Hello traders, today is the 30th of May. My name is Devil Hornsey, market and trading, and today I'll be looking at the week ahead. Okay, going to start with the economic calendar. We can see that the current week is going to be relatively quiet Monday and Tuesday. The US are even on bank holiday, so the US session today is likely to be very quiet. It is the end of month, so there will be end of month flows where there'll be a bit of rebalancing, which probably started last week, to be honest, where we saw the rise in things like the equity markets. It isn't until Wednesday where we get the first lot of scheduled tier one data. Obviously, 2:30 a.m. in the overnight session, Australian GDP quarter on quarter is expected to come in a lot worse than the previous month at 0.6%. Previously, it was 3.4%, so a massive sort of reduction in rate of change there. Will this change the following week when we've got the RBA rate statement and cash rate decision? 25 basis points is kind of what the market's looking for. I don't think this GDP is going to change that monetary policy. We do have in the US session the Bank of Canada rate statement and overnight rates, where they are most likely to rise by another 50 basis points, taking the forecast here up to 1.5%. They previously rose the overnight rate by 50 basis points, taking it to a whole percentage point. So looking to see that carry on as the Canadians also try to fight off inflation. US ISM manufacturing PMI looking to come in slightly below the previous reading. Here they've got it at 54.9. Anything over 50 is expansionary, so that's good for manufacturing PMIs in general. However, looking at the Philly Fed PMI, that came down quite a lot. So the ISM manufacturing does follow that in terms of the sort of direction. So we could actually see a worse than expected ISM manufacturing PMI, which would act bearishly on the US dollar. JOLTS job openings. Fed Chair Powell said about creating demand destruction, trying to sort of cool the economy, looking for the sort of jobs market, which is really tight at the moment, looking for these JOLTS job openings to sort of reduce below 11 million at some point. The forecasts are that they do drop a little bit from 11.55 million down to 11.4. So looking to see if the rate sort of cycle that the Fed are in at the moment has any effect on the JOLTS job openings this week. Then we move into Thursday. The only sort of tier one data point is the US ADP non-farm payroll, where we have in the past sort of noted that the ADP non-farm payroll and then the sort of non-farm employment change do sort of converge. Here it says there's going to be a slight uptick from 247K from last month up to 295K this month. If we look to the non-farm payrolls on Friday, we'd see that 428K was the previous reading. 325K is the expected reading this week. So the ADP and the non-farm payrolls are kind of sort of converging around the sort of 300,000. So we'll see if that comes in true. The UK is on bank holiday all day Thursday and all day Friday. So looking for the London Open to be pretty quiet. We also have China on bank holiday on Thursday. So looking for the overnight session to be not dollar moving in that sort of respect. And then we also have the Italians on bank holiday on Thursday. So Thursday, especially in the London session, in the overnight sessions, we're going to be quite quiet. We might get a sort of carry on, sort of follow through from the Australian GDP number, if that's good. And also the US might carry on into Thursday, as there's very little else probably going to happen. So Friday, we've got the pound, like I said, the UK is on bank holiday. So London Open is going to be quiet. Then come 1:30 p.m., the sort of cash open for US. We've got the average hourly earnings, non-farm payroll, unemployment rates, and then at some point a treasury currency report. So everything's going to be focusing on the average hourly earnings. Is there inflationary pressures there? And also whether or not the unemployment rate continues to come down, and whether or not non-farm payroll, the sort of the nominal figure, does that beat expectations or come in worse to sort of end the week and the sort of sentiment going into the sort of next weekend. So I think everything sort of compresses into Wednesday and then Friday. So if we go to the active trader platform, currently looking for the Australian dollar versus the yen to carry on going higher. It closed above the 9-period moving average, having sort of dipped below the sort of Bollinger Band lower here. above the 200 period moving average. So looking to see if we get a good breakout of the sort of descending sort of wedge. You can see here, if just put the trend line on the candle highs, a little bit push higher, 91.4 to 91.5 should get us above this trend line, then make for a retest and continuation to the upside. I do believe we're going higher. If we're not going higher, then we're probably going to stall out around 92. So that gives a bit of a warning. Obviously, if we get below this swing low here from the 24th of May, we stopped out and we'll probably come down towards the 200 period moving average and possibly the 85.5 and this sort of imbalance area here from the sort of 16th, 17th of March. One thing that wasn't mentioned in the tier one of the economic calendar was the June the 2nd OPEC meeting, where we've got the CME here sort of giving us some sort of probabilities of what will happen. 53% will assume at the moment that they're going to maintain their output increases of around 400k. There is now a build of probabilities for no change or maybe even a smaller output decrease. So looking for so maybe like a turn in the sort of sentiment, maybe a turn in sort of the policy, look and see if they deviate away from the plan. But currently the majority, last week this was up at 100%, so there has been a big reduction down, but this could come back up a little bit depending on the sort of noise that comes out of OPEC ahead of the meeting. Looking at the US dollar versus the CAD, obviously the US dollar has been under a bit of pressure. The sort of Brent, if you look at the Brent chart in a second, that's been like traveling sideways to slightly up. So the dollar CAD has been coming lower. We've come down, we've swept below the 5th of May. So this was the 4th and the 5th were the sort of FOMC, Bank of England sort of days where we had big moves in the currency markets. We've come down, swept that now. So looking to see if we touch the 200 period moving average. We see that it acted as support before, acted as resistance before. So the 200 period moving average could act as support again. So we could come down to 1.26889. Looking to the left, we've also got this high from the 21st of April. That could also act as a little demand zone, maybe some support there. So if we get a pullback into the 200 period moving average, if we close below the lower band of the Bollinger Band and then get back above the 9 period moving average, looking for the dollar CAD to go higher. But obviously, if we get worse than expected US data this week, as it is the sort of main focus, looking to see if the dollar actually collapses and we take out these sort of relatively equal lows around the 1.245 to 1.25. So looking at another major, pound versus the US dollar, looking to the left, scroll down, we've got the sentiment indicator on the active trader platform saying that 54% of traders are trying to go long. 46% obviously going short. That's relatively equally balanced. So we're just looking to see what the price action is doing. We are seeing that momentum's to the downside, but we are retracing this sort of bigger move from the 24th of February. So this is when Russia invaded Ukraine officially. Got big down move on this candle here, and then we proceeded to go lower, even as the Bank of England sort of continue to raise rates. So we're at the moment retracing this big down move from the 5th of May. So the 5th of May was the Bank of England rate decision. We got back above there. We've essentially swept the stops that are above there. We're looking for a close above there. If we get that, then I'm looking for a push up to the 1.3, where we've got this previous areas of support, and the low from the 21st of April will be my ultimate target for looking to see if the 200 period moving average is coming lower and we get a continuation to the downside. So on the daily chart, looking for a pound versus US dollar to go higher. So that would indicate that, the pound and the UK aren't doing particularly well at the moment. There's a lot of turmoil, a lot of unknowns. The market does not like, some surprises. The only reason that the pound would go up is against the US dollar is if the US dollar was to weaken further. This is the dollar index. So looking for reasons to get long or short the dollar index. Currently, price action is below a previous market structure. So whilst we're below the swing low from the 4th and 5th of May, that those two sort of special days again, where we had the Bank of England and Fed before making rate decisions. Since we've come below that, we're looking to see if we get down to the 100 level, maybe up to the 100.8 around this little balance area here from the 21st of April. We do have a rising 200 period moving average. If we were to close below like we did on the 24th of May and then get back above the 9 period moving average, we have seen in the past, we're looking to see if we could go long then. But at the moment, I think the US dollar looks like it wants to come lower. And if we go down to the 200 period moving average, relatively quickly and look to the left, we do have these equal lows here, which would be a draw on liquidity. So looking for a push down towards 98. We have got imbalances on the way up because it was kind of an exponential rise, especially between the 21st of April and the 28th of April. So the whole week of pushing up there. So look, if you look to the left, look for the candle highs. We could come down, find some support there, maybe a bit of demand, and then, sort of stair step our way back down towards the 200 period moving average, where I think if we come through that and we get back below the 200 period moving average, then we could accelerate a lot lower and then come back down towards where we were trading a lot at the beginning of the year, end of last year, and around the sort of between 90 and 95 would be somewhere where I'd imagine this pullback could terminate. Now, one of the indicators that the US dollar index is going to come lower is if the euro versus the US dollar gets higher. Currently, just trading underneath the 1.08, we could come back up to the 1.11, which is where the 200 period moving average is at the moment. And like we said, it feels like a few months ago now, 1.13 was the sort of main pivot level from the start of the year, from the end of last year through till sort of the Ukraine Russia sort of conflict really kicked off on the 24th of February. 1.13 was the sort of main level of trading. That's where the most volume will be. We could come back, like I said, get back to 1.08 and then get back below the 9 period moving average and then start looking for another short to the downside. However, I think we are going to come and test some of these imbalances. So definitely come up to 1.08. I think that's a given. Then if we are going to come towards the 200 period moving average, we might also come to the low of the 31st of March around the 1.106. So looking to see if the 1.08 doesn't hold as resistance. We've got these relatively equal highs at 1.093. So that we move above that, we accelerate up to the 200 period moving average. Brent is currently at the top of a channel, looking to see whether or not the OPEC decision this week affects the sort of energy markets. If we do find that this is resistance, looking to the left, if these candles here act as supply, then we could come back down to the bottom of this range come Thursday. Could have a swift move down. It looks like the red candles are larger body candles than the majority of the green ones. So, if we do have a flash move to the downside, then looking for the 92.7 at the moment to act as support from the 200 period moving average. If we look to the left, we have got a big expansion here, and then we've gone into sort of compression. So if we do make a breakout, retest continuation, if it's to the upside, this compression is building up a lot of energy. So if we do break out to the upside on, increased demand, decreased supply, or, vice versa, if we come down to the bottom, then I think this next expansion is going to be relatively violent as well. Some sort of maybe a $20 move. So if we were to break out here and go $20 lower, we'll be around the 80s by the end of the move. Gold is currently compressing under the 200 period moving average. It's obviously trapped between that and the 9 period moving average as well. If we get a break higher than this swing higher from the 24th of May, I do think we actually go up to 1900 now. Obviously, we've tested it a couple of times before. So then the next question is, can we break above, retest and continue higher to make this sort of pattern? And if so, can we get back up to this low from the 18th of April around 1980 to sort of see if there is any supply there and if there's any resistance left? Otherwise, if we keep compressing and then the buyers just give up, if we get back below 1785, then maybe a retest before we sort of carry on down towards the low 1700s to sweep this low here from the 29th of September 2021. Looking to the left from where we are right now, if we were to break lower than the 16th of May, we do have a double bottom, relatively equal lows here between the sort of early January and late January. Liquidity will be there, so some stops under there. If we get back below that, then there is the 15th of December, and that could be a decent target to sort of also take some liquidity. Now, looking at the S&P 500 sort of benchmark index, we do have the 20th of May low here where we had a lot of volume. A lot of that was based on options expiry. We've now taken, the liquidity that was above the swing high from the 17th and 18th of May. We have extended to the upside, so we've got a big impulsive move to the upside. We've got some highs from these candles from the 25th of May and the 26th of May, which we could come back and test for support and maybe a bit of demand. If there is some buyers left there from missing out on this big exponential move, then we pull back like this. So from these sort of relatively highs now, we're looking to the left. If we stall at some of these highs, maybe just below 4,000, maybe around 3,990, we stall around there and then carry on up. I am looking for the relatively equal highs around 4,300 to be the sort of draw. And, by then the 200 period moving average will have come down a bit lower. So then looking for a retest continuation to the upside if we do get back above this level here around 4,315. But at the moment, we're just looking to see if there's any sellers left here. We had obviously a big outside day move on the 5th of May, looking to see if there's still some more selling pressure there. If they are, then we're looking for these highs, like I said, on the 25th and 26th of May to act as support. If they don't, then we're looking to test the low around 3,790 as a target to the downside. But at the moment, for me, I am looking for upside potential. So I will be looking to buy the dip. As you can see, price action is making now a higher high. We're just looking for a higher low and then a continuation to the upside. Momentum's to the downside. So we are sort of basically just retracing the move from the 30th of March down towards the 20th of May. So that move there from 4,700 down to 3,850, that is the move that we're correcting. If we get back above the 4,600 towards the 4,700, then that's so close to the all-time high that I think we make new all-time highs. So there is a lot to play for in this range, but we could get capped by the 200 period moving average, and then that could be too much resistance. But at the moment, I'm just trading what I see, and at the moment, I've got a low, a high, a lower low, and a higher high. So we're just looking now to see when we get higher low form before we make another sort of decision whether or not to sort of fully commit to going to the upside. Now, like I said, in a couple of weeks' time, we've got the RBA cash rate decision. Looking at this week's GDP, obviously things are set to sort of get weaker, but we are retracing the 3rd of May high here down towards the 12th of May low. We've gone through the 61.8% retracement. We've closed above that. So now I am expecting this to carry on up towards 0.73, get back above the 200 period moving average. And maybe the Australian dollar is the leading indicator for commodity pairs and equities to go higher and the US dollar to sort of continue going lower. If we get into sort of this sort of territory where we go from the sort of high of the move up here, 0.766, down towards the low 0.682, then 50% is pretty much at the 200 period moving average. If we get a close above 0.7334 to 35, if we get a close above that level, then I do think we go up towards the 0.77. Okay, that's what I'm looking for on the charts. We've got a slow start today. Obviously, the US session is going to be sort of quiet. So I'll catch up with you tomorrow and we'll see how things have gone. All right, good luck today. I'll speak to you again tomorrow.